For every one bridge loan that lands, another one collapses halfway across because the same traits that make bridge loans heroic, the speed, the flexibility, the urgency, they also make them very dangerous. High interest magnifies even small mistakes, construction delays, permitting hiccups, or one unreturned investor call can turn a 6-month solution into an 18-month migraine. There was a recent internal survey that showed average extensions right now are running 1.8 times per loan. The translation for that is that every bridge thinks it's temporary. Half end up living in the borrower's guest room, eating their snacks and asking when the refi is emotionally ready. And when that refi market dries up, when lenders pull back or SOFR spikes another 100 basis points, which it's doing every month now, the bridge suddenly looks a little less like a tool and a little bit more like a trap. So professionals love to frame bridge risk as execution risk, which kind of sounds clinical, but underneath it, it's really time risk. It's a bet that tomorrow will behave. You borrow short to cover long-term problems, praying that the future will arrive on schedule. It rarely does, however. See, experts know that the real red flag isn't rate, it's the phrase, we're going to refi in 6 months. That is not a strategy. It's more like a lifestyle choice. Bridge lenders, bless them, because they're adrenaline artists. They like their deals quick, and the clause is very flexible. They talk about optionality the way that gamblers talk about momentum. Their underwriting model is equal parts spreadsheet and faith-based initiative. They know that most borrowers come to them under pressure. There's tight deadlines, there's delayed appraisal, there's a senior lender that's suddenly rediscovering religion, and that desperation gives bridge lenders the leverage that they use, and they use it well. Still, though, in fairness, bridge, they do keep markets fluid. They kind of grease the transaction machine when banks freeze up. So without them, half the development pipeline in the U.S. Sunbelt would stall altogether, maybe the whole country.